What's up, market makers? It's Brendan from Market Makers. Guys, a big early Christmas thank you to all of you from me, my admin team, our members, because we have over 13,000 YouTube subs now. Really nice to see you guys like and appreciate this type of TA. Please go ahead and smash that like button. Help us move up in the algorithm. And guys, we want to give you a gift back. From now to the end of the year, we're going to be doing a sale in our crypto room. If you guys want to join, you want to become Fibonacci traders, understand how to use all the Fibonacci tools, see these Fibonacci patterns, learn to draw them. I have made instructional videos, me and my admin team, on how to draw these patterns so you can understand how to trade them and work this market as a Fibonacci trader. Your opportunity is now to do that until the end of the year. Click the link. It is in the video description to our Discord. Download Discord, click the link. You'll be in, no risk, no obligation. Jumping into Bitcoin TA, my friends. All right, guys, the EMA death cross, trying to be first movers in this space. Very, very important. I want to answer some questions about the death cross, and I want to show you some key Fibonacci numbers you guys need to pay attention to in this marketplace, okay? One of the big questions I'm getting, a lot of people are commenting to me on Twitter and other places, stock the flow, plan B stock the flow says 100K by New Year's. And they also said, December 1st will be at 135K. Both these predictions will be wrong. Guys, he's not considering, most of the people in the TA space and crypto do not consider the macro markets. I'm looking at them in front of me. The SPX is dumping. The Dow is dumping. The NASDAQ's dumping. The Russell 2K, which is a small caps, is in a distribution box. You can watch my Pro Trades video after this. And if that dumps, the small caps lead the large caps, and the Russell 2K is dumping. It's down 1.5% right now. All the markets are dumping. The players in that space are the players in this space, and this is a highly volatile, high-risk asset for them, okay? So what we need to do is look at the market we have. But these 100K, 200K, 500K predictions people are giving you right now, they're not taking into account the future, the current market structure that we have, and the macroeconomics going on in our country, the United States, and around the world with inflation and everything else. So we will just trade and continue to trade based in current time frame. But I can tell you with almost 100% certainty, 100K Bitcoin in the next 11 days is not going to happen based on the market structure that we have, okay? So let's go ahead and jump into this. So the EMA death cross, people keep asking me or commenting, it's not a big deal. Okay, well, my answer to that would be show me one EMA death cross you've had where a positive effect happened for Bitcoin. Because the only two EMA death crosses you have in the last 2 years caused a 31% drop and a 58% drop. The COVID crash and the June 6th dump, okay? And in both situations, you traded, after you had the EMA death cross, you were down in this range from June 6th all the way to this pump candle, July 26th, almost 2 months. Same on the COVID side. Almost 2 months you were down in that range, okay, before you got back above the 233. So it is a big deal. It is a lagging indicator because if you notice here, price pumped up. You got a relief rally all the way up to 41.3 after the death cross, but then price dumped, okay? Dumped from 41.3 to 28,790. Almost a 13,000 point drop. We traded this in the room. Guys, that was a 30% drop, okay? And this death cross, another question I'm getting asked, can it be avoided? The answer is no, because it's a lagging indicator. The 21 is descending too quickly. It takes too long to move it. You'd have to have a massive pump, probably make a new all-time high to avoid it. So the death cross is going to occur. Now I want to show you some Fibonacci tools that can really help you out and help you understand the market and the market symmetry at play here, okay? First tool I want to show you is the trend-based Fib extension. We're going to go from our previous all-time high down to our bull run low, up to our current all-time high, okay? A couple things I want to show you here. Look at the 618. The 618 is the inverse to the golden ratio. In Fibonacci, the golden ratio is a 1,618. The inverse is a 618. The 618 is the most commonly retraced to Fib in Fibonacci trading. Guys, Fibonacci numbers, that's a whole separate hour-long video. Google it. You can read about it. These numbers are present all through the universe, literally the universe, in dimensions of a butterfly's wing, sunflower petals, a nautilus shell is often held up as an example. You can Google it and read about it. It's very fascinating, but this is the basis of pattern trading with Fibonacci, okay? So the 618, one thing I'm seeing here is price really is going up and down around the 618, which I would expect, but the more I look at it and the slower this price decline happens, it looks less and less like a descending triangle, more and more like a falling falling wedge, which is a bullish pattern, okay? A bullish pattern you would break up from. So a logical question would be, where could we find support at? That's a logical question. So you have a falling wedge. Where could we break out from to potentially have a nice relief rally, okay? Maybe a little rally before Christmas. Well, guys, looking at the fib, the 702 over here on the left, this is a key trend reversal fib. That's at 43,415. And guys, we have patterns at 43X, okay? We have a bullish Gartley, a bullish bat. Both of them with PRZs are on 43.5 and 42.5 in this range. So we could see price wave down here and then start to move back up. That is something we're tracking. Again, it's the power of Fibonacci trading, okay? So that could be an area where we find some support. Now, another question could come from this is, well, if we do lose that support and everything just goes horribly, the markets crash, the stock markets crash, bad news comes out, whatever, pandemic, anything can happen, right? What would the market bottom be, in your opinion? Well, I can show you that just based off this trend, okay? The 1618, the golden ratio, 10,300. 10,300, guys. What numbers have I given you earlier? This actually should be up here. Bet you it's 10,600 now. 10,600, guys. What pattern have I given you guys earlier to show you over the last 2 months now where this number could come from? 10,781, 10,871, the weekly Navarro pattern. Again, market structure target from a broken head and shoulders, and then the PRZ of this pattern before price comes back up. 10,781, 10,871, the 1618 is saying 10,630. And guys, this is just really, really important to understand market symmetry, okay? The fact the market moves in patterns. So let's look at some other questions here. So if we did fall down out of this falling wedge and we do come down to that 43K level, where could we rise to? Where could we bounce from? Like, how high could the market go if we find support at that bullish pattern I showed you at 43K? Where could the market go? Well, guys, for that, I can show you this with just a Fibonacci retracement, okay? Let's grab a fib retracement, market high, and let's go to 43. Let's just assume 43.5 for easy math. 43,537 is my zero line. Look where your 618 is. 59,352. This is what's amazing about fib trading, guys. Without even drawing support resistance lines, look what that line is doing across the top of the candles. It's either wicking them or the real bodies are present on them. You can see there's a lot of resistance right here in this zone, okay? So this is a very realistic market top for a rebound, for a relief rally. 59,352. Doesn't mean price can't pump above it. Doesn't mean price could not even get to it. Price could find resistance. You can come down to 43, pump up, hit the 233, and just get rejected and fall down. This is just a market target based on Fibonacci, okay? Something to consider, something I'm looking at. So where could we go? Here's another good question I'm going to ask myself. Where could we go if we do fall even lower? We lose 43, we lose 41,310, we break the primary trend of the market at 39K. Where is the most likely point to find some strength for a strong support rally, okay? And to do that, guys, I'm going to use the trend-based fib extension again. We're going to move it up the current trend, go from our all-time high, the beginning of the impulse, to the end of the impulse, to the end of this retracement, okay? And we're going to look at the 618. 34.8. The 618, 34.8. So this would be, you fall down, maybe you pump up, maybe you get rejected by 233, you lose 41,310, you lose the 43X, and you lose 39K. Where would you come to? You're coming to 34.8, guys, before you potentially rebound. Why is this number kind of funny to me? Do you guys remember a few weeks ago, I read you that story from JP Morgan? Jamie Dimon, the CEO of JP Morgan Chase, came out and said Bitcoin has zero value. It was in the news. 2 days later, his lead analyst said the fair value of Bitcoin is 35K. At that price, it's attractive. It is overpriced until then. Guys, do you remember this? This is why we named this pattern the JP Morgan extension, the white swan JP Morgan extension. Down here, 35K, 34.8, okay, is where we have this pattern, the JP Morgan extension, which means price would fall down, lose 41,310, come down to our PRZ, and then reverse potentially for the relief rally. Okay, how high it will go up. We got to track the candles when they come, and we can pull fibs on them and see what our projections are. Okay, but right now, your market top, looking at the way everything is for a relief rally, if we do find support either from the falling wedge or from the 43.5 and do pump up, it looks like the potential top is going to be that 59K level, unless you just get a ton of momentum to bust through this candle cluster here and really move up. But I don't see it with the other markets dumping really, really hard right now. Okay, these are just all things to consider. And the final thing I want to say, the final question I have is, people say, can you predict when this cross will happen? Well, like I said, the 21 is a descending moving average. It is falling down as the candle prices decline, okay? So the longer they take to decline, the longer this takes to come. But there is a fib tool that can help you with key market predictions. I want to show that to you guys right now. Go ahead and break this out, get this thing ready. Okay, so let's use fib time. Trend-based fib time, guys. Looking for key dates in the market points here. Let's go all-time high, bull run low, or previous all-time high, bull run low to the current all-time high. Guess what number we're looking for? The 618 key pivot point. 618's here in yellow, guys. Do you think that's a coincidence? Look at the EMA death cross. The 618 occurs on December 23rd. Today is December 20th. It's 4:11 Eastern time. This occurs December 23rd. I would not be surprised at all if this crosses on December 23rd, okay? Again, key pivot point. What could be very interesting is actually your EMA death cross could occur on December 23rd. Simultaneously, your price pump out of the falling wedge / maybe finding support at 43.5. This could all happen simultaneously on December 23rd. Get your EMA death cross and your relief rally up to your potential top of 59K, guys. Very, very interesting to watch. Let's go ahead and do some current time frame and do some TA. Let me go bring it to a smaller time frame, guys. 4-hour time frame. Couple key things going on here. So 4-hour time frame, like I said, here's our descending triangle. We were trading in until we fell out of it a few times, lacking faith in the descending triangle. Here's your top though, okay? You can see the top has been true to form, rejecting price every single time. Here's this dotted line, which is the falling wedge, if we are in the falling wedge, okay? And this is also tracking too on the baseline now, so this is very, very nice pattern. The key thing I want you guys to see here is the compression pattern happening, and understand this. So compression patterns are the volatility of candles getting closer and closer together. It's like a coiled snake. It winds up. When it gets to a low enough number, it will shoot out one direction or the other, and you're making waves. Typical pattern is 2 to 4 waves. It can go up to 5 waves. This first wave here was 10%. The second wave was 11%, moving the wrong direction. So we negate that first wave. We are counting these waves from here. 11% to 8% to 5.74%. Typically, you want to see a 40 to 50% decline between waves, which means we have this other wave forming right now as we speak. We're going to make a high, most likely a lower high, and then it's going to compress down even more. And guys, that's going to get you down to about 4%, maybe lower. That's getting very, very close to explosion time, okay? Explosion time. You can see it in your ATR and your volatility. Do you see this? This is your volatility. This is a separation of candles. Look where it's going to. Look how deep that baseline is. When this thing flatlines, ATR will show you the separation of candles. The deeper the retracement, the more powerful potentially the move. Here's the last move that we had right here. You can see these moves, and we can find some of these. All right, let's look at this on the candles. You can see where we're at. This retracement right here, which would bring us to the dump. Yeah, this was the pump. The dump was over here. This was a shallower retracement for the dump, but you can see we find a baseline and then price moves up or down, okay? And you can judge that once again by the shape that you're trading in and the direction of your indicators and momentums showing you, okay? Now, if we did break out of this falling wedge, if this is a move to break out of the falling wedge, I want to show you this because I have it charted out here. As you can see, this candle here, I took this off the base. It's kind of funny. If this actually broke out, it'd be pretty amazing because I put this on here for the video. So your target would be 53K if you do break out of the falling wedge off this compression pattern in a bullish fashion, okay? And again, if you do fall down, it looks like you're going down to 43.5 to try to find support with the bullish patterns that we have. Get that support and try to move up. And the key takeaways are your current market top for a relief rally looks to be around 59K. You have support at 43.5. You have support at 41 and 39. And guys, if you lose that, if the market turns really sour, you're going to the JP Morgan extension of 34X, 34.8, roughly 35K. Guys, another video coming tomorrow. Happy trading. Thanks for watching this. Don't forget to smash the like button. Have a great day. Hope you guys are enjoying your holiday week with your friends and family. To all our international members as well. Take care, guys.